As I say, Jay Powell changing his tune a bit there. Are you thinking after these 3 hot US CPI prints, maybe we've got a real policy error here?
Good morning, Lizzie. So yes, I think so. This is something that we've been discussing for a while now, that if they started cutting too soon and too drastically, that would sort of, put them into a policy error here, because we've been seeing inflation. So since December, in fact, when Jay Powell came out and he was very dovish, we've been seeing things start to, pick up. We've seen animal spirits come back into the market. We've seen the market surge. We've seen commodity prices start to increase, not just for the easing of financial conditions, but also because of global weather patterns and manufacturing coming back. So everything considered, yes, we've been seeing inflation gradually start to pick up. And our notion was that they would start cutting in July. We may have to push back that a little bit to September now, because and it's a good thing, because at least they're acknowledging that inflation is still a problem.
And indeed, the market reflects that repricing. I wonder whether you think that maybe the Fed's going to botch the landing now.
That's something that we were thinking about. And again, if they had cut too soon, we were thinking that inflation may come back in a big way, and that would mean that they were so close, but finally they botched the landing. There's still room for that, because the Fed is famous for making policy errors. But this time around, it would seem that they're being a little bit more level-headed. And if they are acknowledging inflation here, if they are going to wait for a while, I think we might see them actually land quite okay.
And when it comes to stocks, obviously, Ayesha, it puts a lot of pressure on earnings season to deliver. You've got the Magnificent Seven pretty much priced to perfection. Can it deliver?
Lizzie, I don't know, but we would hope so, because if they don't deliver, we're looking for a lot of pressure on the market. So right now we have yields that are above 4.5%. That was kind of a threshold that we and other traders were watching. And you can see what's been happening as soon as, yields started crossing 4.5%, right? I mean, the market started to go down. We've been down now, I think, for 3-4 days in a row. Add to that the geopolitical tensions. So everything considered, I don't think we are in a very good position right now. And so if the Mag 7 doesn't deliver, and I want to say not the Mag 7, in fact, just maybe the Mag 4 even, if they don't deliver, we are likely to see further pressure on the market.
I love the honesty. Ayesha, you mentioned the geopolitics. Let's talk oil. Do you see it hitting $100 a barrel? And if so, how much would that impact margins?
So we're in a very interesting situation right now. As you saw, nothing really happened to oil even after Iran attacked, right? And part of the reason for that is because everybody knows that Iran cannot actually block the Strait of Hormuz. It's not in their best interest to do that. They need the access port. But at the same time, I think, the threat of disruption is enough to push it above $100 a barrel if the threat is real enough. I'm not saying that, we're going to stop oil flows through the Strait of Hormuz or through this area. But at the same time, market sentiment is what moves prices, right? And so that could sort of put upward pressure on prices for a little bit. Now, in terms of margins, obviously that's going to weigh on margins. That's going to weigh on the dollar. So our biggest threat here, I think, from everything that we're seeing, whether Fed policy, whether geopolitical tensions, is a higher dollar. A higher dollar obviously puts pressure on emerging market currencies, which brings back inflation in those countries as well. So everything considered, what we're watching is the dollar, I think. And, we want to see the dollar remain stable. And becoming too strong here would actually cause havoc across the world.
OK, so the strong dollar putting pressure on emerging market currencies elsewhere. Just before I let you go, Ayesha, which sectors are you liking?
So with inflation coming back, we do like the reflation trade. We've been talking about that for a while. Energy is an obvious choice. We've talked about that, I think, for 2-3 months now. But there's also the EPS upward revision here in the sector. So we like energy, we like materials, we like mining. These are good sectors to be long for the time being.